Have you been keeping an eye on Palantir lately? If not, now might be a good time to start. In just 2 weeks, Palantir stock has jumped 18%, nearing its all-time high, and investors are taking notice. So what triggered the surge? On September 18th, Palantir secured a massive $1 billion contract from the UK Ministry of Defence. The deal strengthens their partnership in AI and defense data platforms and follows a $75 million agreement they signed back in 2022. It's another major vote of confidence, not just in Palantir's technology, but in its growing strategic role in European military systems. But here's the real question. What kind of company consistently lands billion-dollar defense contracts from both the US and UK governments? Palantir is one of the most widely followed AI application stocks on the market today. Although it only went public in 2020, the company was founded way back in 2003 in Denver, Colorado. From the very beginning, it worked hand-in-hand with US military and intelligence agencies, including the CIA. In fact, Palantir gained its earliest fame after helping US forces track down Osama bin Laden. Its reputation has only grown since. Much of that success is thanks to co-founder Peter Thiel, also a PayPal founder, who used his network to help embed Palantir deeply inside the US Department of Defense. Even the CIA's own venture capital arm, In-Q-Tel, backed the company early on, essentially giving it a government seal of approval. And if the name sounds familiar, that's because it is. Palantir comes from The Lord of the Rings. In the story, a Palantir is a magical seeing stone that can observe events across time and space. It's a fitting name for a company built around powerful data intelligence and real-time global insights. So what exactly does Palantir do? At its core, Palantir builds software platforms that help governments and businesses make sense of complex data. The company initially focused on counterterrorism and fraud detection, but its tools have evolved far beyond that. Today, Palantir operates 4 major platforms. First, there's Gotham. Built specifically for government clients, Gotham pulls together sensitive data streams like surveillance and intel and turns them into real-time, actionable insights. Next is Foundry, the go-to platform for commercial clients. It helps large enterprises clean, organize, and leverage messy datasets. Think airline maintenance logs or global supply chain data. Foundry makes it usable. Then there's Ontology, a framework built into both Gotham and Foundry. It connects people, assets, and workflows to build digital twin models of organizations, enabling smarter simulations and decisions. Finally, there's AIP, Palantir's artificial intelligence platform. It doesn't just analyze data, it acts on it. AIP can simulate scenarios, recommend actions, and even automate key business decisions. Palantir's Q2 earnings tell a compelling story. Total revenue hit $1.004 billion, up 48% year over year. That marks the first time the company has crossed the billion-dollar mark in a single quarter. Revenue from the US alone reached $733 million, a massive 68% jump. Government contracts brought in $550 million, while commercial business pulled in $450 million, both growing at nearly 50%. The company is also turning a solid profit. Net income hit $327 million with an 81% gross margin and a 33% net margin. And get this, Palantir has over $6 billion in cash and zero debt. Customer growth is strong too. Total clients are up 43% year over year, now totaling 849. US commercial clients saw the fastest growth, up 64%. In this quarter alone, Palantir locked in $2.27 billion in new contracts, a record high. Looking ahead to the third quarter, Palantir expects to earn around $1.08 billion in revenue. That's more than 8% growth quarter over quarter, and 50% compared to last year. Management is also projecting increases in operating profit and free cash flow, with confidence that AIP will continue delivering practical AI value for real-world challenges. As impressive as all of that sounds, there's one thing we can't ignore. Palantir is trading at sky-high valuations. The company's market cap now sits around $43 billion. Its trailing PE ratio, a staggering 567 times. Even with optimistic projections, the forward PE is still north of 400. To To put that in context, the average tech giant trades at around 35 to 40 times earnings. Salesforce, one of the biggest names in SaaS, is around 34 times. In short, investors are pricing in enormous expectations, and that's caught the attention of short sellers. Citron Research recently called Palantir's valuation absurd, suggesting the stock should be trading around $40 per share, about 77% below its recent highs. We agree that Palantir's current valuation is stretched, but long-term, it's still a company worth watching closely. Here's why. First, Palantir isn't just another AI analytics firm. Its AIP platform and ontology framework go deeper than standard data tools. They participate directly in decision-making, something most software can't do. Second, customer loyalty is incredibly strong. The company's top 20 clients are now spending an average of $75 million annually, up 30% year over year. That's not casual usage, that's deep integration. Third, Palantir's AIP is already making a difference. In Ukraine, it's helping the military integrate drone and satellite data to create real-time battle plans, shaving decision time down from hours to minutes. And finally, the global defense budget is rising fast. NATO countries are ramping up spending, and Palantir is well positioned to capture those opportunities. So when should investors consider jumping in? Based on optimistic projections, Palantir could reach $4 billion in net profit by 2028 while maintaining strong margins. If we assign a PE of 50, that puts a fair market cap around $200 billion. That's about half of what the stock would need to fall to before becoming reasonably valued today. In other words, if the stock corrects by more than 50% down to the $85 billion market cap range, it might present a strong long-term opportunity. Palantir is not just a data company, it's a powerful blend of AI, defense tech, and enterprise software with real-world applications and global ambitions. Yes, it's expensive right now, but if the company continues delivering high-quality earnings and secures its place in the AI and defense ecosystems, it may be one of the most compelling long-term plays out there. So what do you think? Is Palantir a bubble waiting to pop, or an overlooked gem in the AI gold rush? Let us know in the comments below. If you found this video helpful, please like, share, and subscribe to TradingKey. We break down global market trends and uncover opportunities you don't want to miss. Thanks for watching, and we'll see you in the next one.